Stocks that have in fact done well. On our radar today is the world's largest two-wheeler cable maker, Suprajit Engineering. In fact, in a market that has fallen, the stock has risen 35% since the start of 2016, and the company has had a fairly good first half of the year. If we can just pull up, some of the statistics as far as the earnings are concerned, in H1 itself, the company has done a revenue growth of almost 30% and a profit growth of almost 60%. Ajith Rai, the Chairman and Managing Director of Suprajit Engineering, joins us now to talk about that. Ajith, hi, good morning, and thank you so much for joining us. You've had a great calendar year. You've done some acquisitions. You've reported good numbers. But tell us what the growth in 2017 could look like. You do have, some acquisitions that you've done, not just Phoenix Lamps, but recently Western Controls in USA as well. What would that bring to the table for your company over the next 1 to 2 years?
Good morning. Thank you for having me on your channel. Yes, 2016 as well as 2015 has been landmark years for us at Suprajit. As you know, in 2015 we had acquired Phoenix Lamps, and in 2016, a couple of months ago, we have acquired Western Controls. Basically, these two acquisitions have been very strategic for us. One from a product diversification point of view, as well as Western has been more from the point of view of finding a new niche, new sector within the automotive cable space. Both have been very good fit for us, and we feel that 2016, as you know, has been a challenging year from the point of view of business, particularly in the last couple of months. But going forward in 2017, we believe that with the three brand strategy that we are now adopting, Suprajit for automotive control cables, Western for non-automotive control cables, and Phoenix for the automotive lamps business, we believe that we are perfectly set to grow our business in not only in the Indian atmosphere, but also beyond India in the global scene. So as you know, by next year our
sorry, that was my question actually. What is your domestic export split?
Yeah, if you sort of roll forward, Western will have a full impact on our business next year as a full year of operations. So when we look at 2017 financial year, 17-18 financial year, we think that 55% of our business will be India-centric, whereas 45% will be outside India, global business, which is a very good strategy to have. If you recall, about 10 years ago, we just had 1% of our business as our global business. The whole, way we do business today has transformed into be more a global company than a domestic focused in business.
Okay, I was going to come to that because you recently secured some new business from the likes of BMW, Volkswagen, even Renault. I wanted to ask you, what exactly is the quantum of those orders and when would they get executed, in which financial year?
Currently, amongst the three, between BMW, VW, and Renault Nissan, I think BMW is our largest account. We do about 4 odd million. VW and Renault Nissan is about 1 million to 2 million business. But what is important is that each one of these companies' cable buys, that is our main product that we are selling to them, is anywhere from $30 to $50 million. So the point is that having entered these customers in the last 2-3 years' time, how much we can do to convince them to give us more business. So we are a small player within their buy list, but we can easily grow that business. And I think in the next 2-3 years' time, we have significant new businesses both from VW, Renault Nissan, as well as BMW, which will grow our automotive cable exports to the next level.
Okay. Well, actually, Mr. Rai, I wanted to ask you, since you have a substantial amount of domestic business, how's business been in the last 8 weeks? Are you seeing any pain in, other auto ancillaries? Your OEMs, of course, are very sturdy people, but if you can give us a feel of the industry itself, the smaller units, the MSMEs.
I think there are two sides to the question, Lata. One is the automotive OEM business, and the second one is the spares or the aftermarket business. Yeah. Because, the medium and industries like us, we cater to both the sides of the business. The OEMs have reduced their offtake. In particularly, December has been probably will be the worst month for a while to come. Okay. Most of them have block holidays. They've got maintenance off. from anywhere from now onwards till end of the month, there's hardly any business being done at the OEM. Similarly, in the aftermarket, in the spares business as well, which has been significantly has been a cash market. So that has had its own effect since the demonetization has been announced. So this pain will continue for some more time. My own view is that both for the aftermarket as well as OEMs to recover, it will probably take another 3 months to get back to normalcy.
So can people, my fear about this latter segment, which is strapped for cash and which has always been a cash business, is it possible that people may go out of business for good?
There'll be always, this is the, famous theory of historic theory that, the weakest will go. So, yes, we do expect some of the distributors who are not really strong fundamentally, who has been doing only cash business, will have difficulty to survive. What's happening in the supply chain is that the stocking levels are coming down. Let's say in an aftermarket business where we do our business, the typical holding cycle from us till the service station, there is at least 3-4 levels, is about 16 weeks. Now it will crunch to something like 8 weeks. So the people who are getting affected are the manufacturers right now. Right now all the dealers, distributors, service stations are crunching their stocks to bring the new cash in to place new orders. So, we'll now pick up the business hopefully in the, from January onwards going forward. But as I said, it will take at least another 3 months to before the normalcy comes into this business. Yeah.
Okay, so by the end of FY17, what kind of growth are we looking at in the top line? In FY16, you had a pretty healthy growth. I mean, you had a 55% growth to 950 crores. Are we looking at, something around maybe 1400, 1500 crores in FY17 as well?
You're talking about the current year?
The current year, the revenues.
We actually don't talk about the futuristic number. All I would say is that we will grow, of course, with the Westcon that is on our bag now, on a fully consolidated basis, we'll grow pretty nicely. I think, the growth will always outbeat. Our own stated philosophy is that we will outbeat the India industry growth by at least 5 to 10% on a consolidated basis, which I think we'll be easily able to achieve. Beyond that, I think our margins will be very well protected. So, despite this current turmoil in Indian market, I think we will have a good year on an overall consolidated basis. Although on a standalone basis, some of the numbers would look slightly, weaker.
Point taken. Thank you very much, Mr. Ajith Rai, for joining us. Have a